things are really getting hot right now. You can see this all over the place. The first thing I want to cover is the asset rush. We are watching big money moving from one direction to another. I will give you the details you need to know. The second thing I want to cover is the inflation heat. You can see this in your own bills that you're paying today, and it seems like practically everywhere around the world, things are going wild. The third thing I want to cover is the market madness. There's some serious divergence taking place today. I've got information from Michael Burry. I've got information out of China. I've got so much to cover. Let's go. I wanted to lead with this. It's Michael Burry posting this old article back in October of 1929. This is what he said, or the title says, and he wants to highlight that. Brokers believe the bottom is reached. And essentially, they may have been wrong about that. But the point here has nothing to do with Michael Burry or this article in particular. It's that nobody knows what's going to happen in the future. So I wanted to lead with that as we go on to the next one here. Oil prices could hit an off-the-charts spike, according to this particular strategist. They mention $100 a barrel. You've heard $90 a barrel, $100 a barrel, and some have said even higher. Of course, nobody knows. But if you take that and compare it to the rest of the commodities that have surged many-fold in some cases, and look at it historically as well. Oil has been at $150 a barrel before. So even if you don't factor in inflation, we are still well below its previous high. Oil being super important. It is, obviously in high demand at this time, and just in general, it looks like under those, technical and fundamental aspects, there could be a reason for it to hit $100 a barrel. It all depends on, are they going to pump out this much, their production, the inventories, and so many other things along the way. But certainly, it's something to watch. Hedge funds flock to oil as energy shortages worsen. More money is moving in. If you want to check it out, this Reuters article has several charts that are associated with it. I would recommend checking it out if you're interested. But essentially, the big money is flowing in. Take a look at this. U.S. trade balance of petroleum products, and you can see it's slightly in the negative. We are an exporter of energy. Yeah, better than you were 10 years ago, but the U.S. imports a lot of petroleum products. Okay, let's be honest about that. This is important because I know that you around the world have been telling me about this. We're talking about shrinkflation. Shrinking products and rising prices. From cereal to soap to paper towels to pretzels, you might have noticed you're not getting as much as you used to at the grocery store. Let's talk about this in the comments today. Shrinkflation. Examples of shrinkflation. Let's discuss in the comment section below, because I want everybody to know, wherever you are around the world, you can just put your country or your state or city or whatever you feel comfortable with, and let us know what you're seeing. Are you seeing shrinkflation, or is it business as usual? It's status quo. Nothing has changed. Let me know. Let's talk about that, because I've seen some people say the price I pay for this or that hasn't really changed. Other people have said, I'm paying 3 or 4 or 5 times as much. And then we have the shrinkflation factor. This is so key because it's a stealth inflationary tax. Think about it. They're giving you, it actually says, the studies have proven that people will accept a smaller box or smaller container or jar over an increase in price, even though it doesn't make sense really, because it's the exact same thing. In many cases, they're increasing the price and they're reducing the quantity. So this is so key to understand. Let's talk about that, all right? And then you have this. Shocking, if you can believe it. My friends in New Zealand, I want to know what you think. New Zealand raises rates to tame inflation with more to come. Can you believe it? I am just shocked. They are actually, number one, admitting that there's this tool called raising inflation. Whoa, can you believe it? Yes, that's right. And they are saying that raising interest rates to calm down inflation. And they specifically say that, we can't do it at an extremely fast pace because there's a lot of uncertainty and so on. But we want to do this because inflation is getting too high. So they're going in the complete opposite direction, even with their forward guidance, even with their mentions of the reasoning behind all of this. Look, if they bring it, right now it's at 0.5%. If suddenly things start to tank, there's a recession, who knows, whatever, they could still bring it down. But at least they've given themselves that room. In the US, there is no cushion whatsoever, and that is extremely dangerous. My friends in the UK, check this out. British Renaissance. UK Google searches for stagflation hit a record unlike the rest of the world. So it is getting more popular worldwide, but if you see it in the UK, clearly more people in the UK are concerned about stagflation than the rest of the world. If you want to guess why that is, put it in the comments below. Let's discuss. I look at all the comments. I know if you've been around a long time, you know that I do. So check this out, all right? Number one asset year to date. What do you think it is? Can you guess? Well, I don't know if you could see that font. If not, take a guess. What do you think? Is it gold, silver? Is it the S&P 500 stocks, large cap stocks maybe? Is it mid cap, small cap? What could it be? What could it be? Oil? Number one asset, Bitcoin. Bitcoin, almost 50%, 49.1%. And then, of course, they don't break it down to other cryptos and so on, but they're just putting Bitcoin at the top of the list, despite the fact that there's been so much volatility in the price this year. Commodities, 36.7%. That's taken as a whole. If you break that down even further, of course, we've seen many commodities go berserk. But the point is, you can compare that to cash, which they put at 0% anyway. And then you see European stocks, 10%. Okay? So while you may have compared European stocks to US stocks and you say, look, they've been poor performers, but compared to what? It's all relative. In fact, they're showing you on here gold, which should be doing well during an inflation, is not the case today, minus 7.9%. And now, of course, that's the beginning of the year up until now. Nobody buys on January 1st and then sells it off at these arbitrary dates or on December 31st. That's not how it works. But it's just making a point, okay? Look at this. This was back in March, earlier this year. So a couple developments happened. Poland's central bank wants to buy 100 tons of gold. My understanding is that not that long ago, Poland actually repatriated 100 tons of gold. So they brought that back into their country. They specifically say that. And why is this happening? In this article right here out of Reuters, they said, we are doing this because we want to get off of the US dollar. Or that was the suggestion anyway, that they want to get off the US dollar, reduce their reliance. This is huge. This is big, okay? And they actually said that they specifically want to increase their purchases in 2022 by a great degree. Very big. If you think that this is a wise move for Poland to do this, hit that thumbs up. Let's discuss this because some central banks are buying up the gold. Let me know. Hit that thumbs up. More money has rushed into commodities by big investors today. A price boom incentivizes business for the harvesting, for the mining, and so on. My message to investors is to stay ahead of the trend, but not get overly leveraged. Now I want to move through these quickly. I'm just showing you a comparison between the S&P 500 and the 10-year Treasury. So if I pull out the highlighter, you'll be able to see this a little more clearly, the S&P 500 being the blue. So this right here was May. Okay, so May, you could see how through the end of 2020 up until May 2021, they're roughly around the same, moving up. But then there's this divergence that takes place, okay, right over here up until, I would say, early September, okay? The S&P starts to fall down and the treasuries start to increase. Right now, at least at the time of this chart, 1.52. Well, are they going to converge? Okay, maybe a little bit of give and take. Who knows? What do you think? This is important. Okay, I've seen a lot of predictions coming in the comments, and I'm always interested to hear. Now, this one was a shocker to me. Manhattan home buyers send sales soaring to the best in 3 decades. So it looks like more people moving in, buying up houses in Manhattan, which, you want to call it a dip, sure, but coming off of those extremely high prices, it's not much of a dip. So this article and the next one is essentially saying, look, this veteran analyst hears echoes of the 1929 crash in today's stock market. So I'm just highlighting what we said at the beginning. There are many differences between 1929 and now. They're just going into all of these different indicators. Okay, if you want a lot of those indicators and how this parallels in some ways, definitely check this out. Links will be in the description as always. Buy the dip has failed. Here's what investors need to do next, according to Morgan Stanley. And this chart here was one I showed you, I think yesterday, the day before, and that's the 50-day moving average, and it dipped below that. So where is it going to end up? This is all speculation. That's why I mentioned that at the beginning. All speculation. But if you want to check it out, these are the articles for you. Look, the U.S. trade deficit widened to a record in August as imports rebounded. Now, as the rebound happens, at least in the consumption, you have to break that down a little bit, because I do believe that the restaurants, that the individuals, there is a mass amount of purchasing being done that would have normally been into the future, just brought to the present. So is that sustainable? My opinion, no. But there's also so many different issues happening at once. But I digress, okay? This is it. Big news. I saw comments about this. I wanted to make sure I covered it because I know you guys are paying attention. China has started unloading a small number of Australian coal shipments despite an unofficial import ban. You know what's going on in China. They've got the blackouts. They've got problems. They're, at one point the factories are shutting down. The next point they're saying, you've got to stay open, all these different things, okay? In a move underscoring the intensity of the power crunch facing the world's second largest economy. Okay, they're looking at here, enforcing a ban. You know that China and Australia have kind of been butting heads, although their partnership is not just because of the proximity, but they have been doing a lot between the two of them. There's no doubt about that. Australia has the resources, China has the appetite, and they work generally good together until recently. Okay, some serious problems there. Then we have this. I covered this in my emergency broadcast that I'd done. If you didn't watch that already, this was updated on October 5th, and it just shows you China's developers priced for meltdown as contagion risk spreads. I use these terms here, and people say, I see the comments all the time. You're spreading fear, you're this, you're that. I'm literally taking words from the titles of these other articles, this case, Bloomberg. So that's what I do. I'm an aggregator of data. I'm showing you that, but anyway, not to get off point. Property stocks plunge after Fantasia misses bond payment. Nation's dollar junk bond set for the biggest drop since 2013. This is big. I'm going to keep covering it. Okay, no new developments since that previous video I had done, but I just think it's wise for people to understand how the contagion works. It doesn't have to be Apple or Amazon failing for it to be a catastrophe. It's a domino effect. Okay, and it goes within the sector and then it unravels from there. Doesn't mean that's going to happen today. It means we should watch out. And this right here, just really quickly, I'm not ready to do a full discussion about it, but I'm paying attention, trust me. The IRS wants to look at your bank account. Its quest for missing revenue would threaten taxpayer privacy. So they're talking about a $600. And basically they actually make the case for pretty much every transaction they need to know. And they say, Janet Yellen said, we need to make sure people don't evade taxes. This is funny because People push really hard. They said the big billionaires, they're getting away without paying taxes. So what do? They implement a law that basically says any transaction you make is now going to be, tracked and so on. They're going to get away with everything still, and you, the individual, are going to lose your privacy. Scrutiny intensifies on the Federal Reserve after trades revealed. It's so silly that they're allowed to publish this type of information, knowing nothing's going to change. Sure, Kaplan, Rosengren, they're gone, right? Maybe you burn a few here or there. Great, right? Is the issue resolved? No, because the Federal Reserve itself, your dollar bill says Federal Reserve note at the top. They got the pyramid on the back. They got the all-seeing eye. They are doing everything at the structure of this institution, not Powell, not Janet Yellen when she was there, Ben Bernanke, Come on, let's get serious and understand the power structure and how it works and who it benefits, all right? If you want to be an insider, it's totally free. I email you the video of the day 5 days a week. Check it out right here at this card or at themoneygps.com. And hang on a second, don't go anywhere. You've got to click that like button to support this channel, all right? It's simple, it's easy. Help me out, just click that button. It's right down here, all right? If you haven't seen this video yet, you definitely want to check it out. Just click it, and then I'll see you there.